Hi, folks. There's another sort of thinking out loud post here. It's not a very festive one. It's about the economics of AI and L&D. It's the 10th of December. This is not a Christmas post, but I wanted to sort of share, I guess, trying to sort of think through the connection of some evidence here. Some of it's not surprising. I guess, our own data, Fosway, the digital learning realities research of this year has seen, hard economic times continuing to pressure the industry. So, significant proportions of teams are delaying or stopping investment in projects. So we're seeing, buying cycles are hard. We've seen, over half of HR teams seeing the economic pressure having a significant impact on budgets. That's in terms of resourcing, and also, I guess, cash spend as well, and capital spend. All of those components are weighing heavily on the sector. And I think one of the things probably we're seeing more of this year is, it's a sort of third year of uncertainty as well. What will the economy and what will various industries and segments look like in the future? It's a tough time to make those confident judgments. So uncertainty is a big factor. At the same time, we're seeing these enormously high expectations of what AI is going to achieve. So we're seeing, nearly 40% expecting a lot or a great deal of impact from AI in the future year, in the coming year. That's higher than we've seen in previous years, tracking that particular question. So the anticipations are high, but actually getting higher. We're seeing that around half of teams expect that about half of their activity could be replaced by AI over the next 5 years. So the expectation is of, a high level of impact. Perhaps that's due to sort of the more kind of business as usual content focus and content preoccupation of the industry. Generative AI is very, very good for that. So that's unexpected, but the anticipation perhaps from more real use is that actually, the promise perhaps is more real. At the same time, this is where the efficacy of the technology and the economy come together. So we're seeing 71% investing in content creation. No surprises there. I think that's what we've all expected and all expected to see and are seeing. But at the same time, we're seeing so one of the reasons for that is clearly for saving. So we see only 9% of teams are expecting to hire more for projects, declines in the use of freelance inputs, and declines in the use of kind of marketplace and contractor resources as well. So it's definitely an anticipation that AI has a high efficacy and can save on those resources. Also, we're seeing at the same time, actually, that which is perhaps no surprise again, that an anticipation that these technologies and tools can help more or support more self-help from SMEs and project teams. So whilst a designer may go to interview an SME, now the SME can do a lot of that design work and the heavy lifting with automated tools. So an anticipation, against the backdrop of hard times, very high expectations and anticipated savings. Whether those anticipations are real or not, I think it's too early to tell. At the same time, there's a sort of sense that that maybe the hype bubble is deflating. Whether the market is a bubble and is deflating, who knows? But the hype bubble I think, is deflating. We've seen this. There was an earlier study from MIT, which is obviously hotly debated and much disputed, that ROI has been hard to come by. Interestingly, McKinsey and BCG released very similar studies with similar findings. Not that the outcomes and the return or the value is not around. It's just not happening as quickly as anticipated or to the extent that was anticipated. Expectations are high. The hype has been a problem, I think. The expectation of very, very strong efficacy in the short term is a challenge because life's messy and it's not as simple as that. I think it's interesting that the use cases vary in complexity and ambition significantly, and in learning and development, where it concerns the creation of media assets and design of content to wrap into authoring tools and then release. I think we can see the efficacy of that. I think some of the more ambitious uses of these technologies to reframe L&D strategically as an engine for skills, as a strategic partner for problem solving, a performance development in organizations, using the technology for those longer term, probably more nebulous but highly valuable outcomes. I think it's perhaps less certain exactly what that will look like. It's not to say that it's not happening, but the outcomes are perhaps less clear, and the value, the achieving that value is less of a kind of clear straight line than it was. It's not to say it's not happening, but I think so. So I think there's some interesting open questions. We're going to look at this in our second phase of our AI market study and market assessment, looking at this sort of question of value, particularly on the corporate side, value for your AI investment. But when will those savings be realized? A lot of bets have been placed that we can make these cuts now because the savings are going to come, but when and what will they look like? And what happens in the meantime? How do you manage? Do you anticipate? Do you rehire if you've frozen? Do you turn to contingent resourcing, or do you reframe objectives and try and sort of make do? I don't think anybody knows the answers to these, but I think it's an interesting. It feels like the economics are sort of opening those questions a little bit more. As I said, this isn't a particularly festive thought, but Merry Christmas to you all, and let us just know what you think. Do you recognise this reading of the situation? What's your anticipation of the impact of those investments and the achievement of the value that you're expecting? Anyway, thanks. Let me know what you think.